Thank you, everybody. Really appreciate you coming out to our inaugural rooftop event. So we do appreciate this. We've been here at Rose Avenue, 909 Rose Avenue now for about a little over 2 years. And so this is our first time really getting to open up the venue here. Really appreciate you guys being here and for helping to make this event possible. So this afternoon, we're going to talk about critical legal and financial strategies for growing your business. And essentially, it's really about M&A. And a lot of our clients eventually have to face that question about when they want to exit. And what we always recommend to our clients is that you think about that way in advance. You don't wait until you're planning on doing it next month. You don't wait until you're planning on doing it this year. It's something that you really start to plan way in advance. And if you start to think about what has to happen in advance, and you start to build that into your corporate strategy, your execution, then you're going to be in a much better shape. And it's also ultimately it comes down to embedding best practices in your business, which is going to be strengthen the business. And again, make it more of a valuable asset at the end. And so it's never too early to think about an acquisition. Sometimes, I might not be planning on retiring in the next 5 or 10 years, but at the end of the day, you want to be operating with the end in mind. So without any further ado, I want to introduce our experts. So we have Cedric Powell from Sheppard Mullin, and he's in the Washington, D.C. Practice, the corporate practice group. He guides clients through middle market M&A transaction. With a practical business-first approach, he represents private equity sponsors, strategic acquirers, and founders across industries like aerospace, defense, government services, tech, and logistics. Cedric also advises on equity financing, joint ventures, and corporate governance, and is an active member of the firm's private equity and aerospace defense industry teams. So, Cedric.
Thank you.
So we have Wally Angel. He's one of our own, VP of Finance and Accounting, client CFO at Rose. 20 years of experience in government contracting, specializes in FAR and DCA compliance, indirect rates pricing, system implementations. He served as a trusted advisor to the C-suite on financial strategies, planning, and operations. He's a CPA, Delta Point Master Certified Professional. What about M&A reveals business risk? Like what should you be thinking about in the M&A process? So the questions we're going to start with, and by the way, we want this to be an interactive session. So if you have specific questions, feel free to chime in. You want to ask something different than what we're talking about, feel free to chime in. But we're gonna really talk about the few different questions that we came up with, and we're going to talk about it from the legal perspective and the financial perspective. So Cedric's going to talk about the financial perspective, and then Wally's going to talk about the legal perspective.
Everyone's in help.
A lot of times we see clients go into an equity transaction, and they may be working just with us. And when they are, we always recommend they get legal involved sooner rather than later. You don't want to sign your LOI and then get legal involved. And the same thing goes when you're working with legal, they have a different perspective on how a transaction should occur. They're thinking about it from the legal side, and then we as finance and accounting professionals think about it from the financial side. So that's really the whole premise of this presentation. So we're going to ask a question, we're going to get both perspectives. Okay. So the first question is, what should business owners consider when thinking about selling their business, especially in the current market? And we'll start with the legal perspective. Wally.
Sure. Thank you, Ted. Thank you all for joining and for having me. So we got a lot of things to consider when you're thinking about selling a business. I think on the legal side, we want to think about what a buyer will be focused on. So a big part of the task, the lift for a founder or CFO or CEO will be figuring out how to both staff running a transaction process and also running the business. When you're talking about a business of certain sizes, that's usually the push and pull. A deal can be very demanding. If anyone in the room has gone through a transaction, it can be very demanding on the internal team. So the first question I would say is staffing. How are we going to staff the team that will manage this transaction? And then once you do that, what are the issues that a buyer may be focused on? I think first and foremost, to the extent your owner group is not one or two or three people, you want to ensure you have all of the documentation around who owns the business, right? That's going to be the biggest point is cash on the barrel or however the consideration is, and I'm getting the full business here. So you want to ensure you have records depending on the age of the business, depending on the size. Transactions get done differently, so there may not be crisp and clean equity records going back. To Ted's point, you want to get legal involved so that your counsel can figure out those issues ahead of time and give you solutions for those problems, as opposed to being at the transaction table and now they're being raised for the first time. And I think the one of the other issues is kind of a broader issue, and I would just put it in the compliance bucket. So you want to have legal looking at areas where there may be compliance risk, and that compliance risk may be solvable, or if it's not solvable, it may be quantifiable. And so again, you want to have that information up front so that you're not going into a transaction blind, not knowing you have this risk, and then the buyer identifies, and the buyer is the one telling you the nature of the risk, quantifying it for you, and then applying it to the transaction value.
Great. Thank you, Cedric. Wally, on the financial side.
Yeah. So what I would say first of all is, for any small or mid-sized business owner that is thinking about a transaction or whatever, the business owner's role in that transaction is convincing a buyer to say yes, convincing a buyer to say, we have to have this company to continue to grow, to enter a new market, whatever it is. And if a business owner is able to do that, then basically Cedric and I's job is to make sure they don't have a reason to say no. Because if you get a business owner and then you get the operations folks on the buying side, all bought into what that combined organization looks like, at the end of the day, there's momentum to want to have a deal to take place. And so then at that point, from a legal perspective, it's making sure that there's everything put in place and there's nothing that people are going to trip over from a legal perspective. From a financial perspective, it's really about getting the books in order, making sure the books are clean, being able to pull together forecast, budgeting, historical financials to be able to build up. This is where the business is at. This is the historical margins on these contracts. These are the contract types. This is the makeup of the business. And then here is what the outlook looks like for the next 3 years. And this is why it makes sense. And these are the assumptions that we've built in for growth. These are why those assumptions make sense. And so really entering into a process, and prior to entering into a process, is making sure all that financial information is organized and put together in a clear and concise manner so that once due diligence occurs and once they have their financial people start looking at things, there's nothing discovered that might be a tricky look. Now, I'd be remiss, for Tim, one of the other partners here, who's our tax partner, it's also important to make sure from a tax standpoint that you're thinking about the tax implications of any transaction, whether that is what state, are the owners going to reside in, are there ways to limit what that tax, ultimate bill is going to be as part of the transaction. I think that is an area that gets not fully looked at going into the process, but can be a significant driver in the total realizable values of the business that the owner is going to be able to get from the deal.
And I think that is one of the key things that you want to be thinking about early, and as opposed to later. There's a lot more you can do if you're thinking about it 5 years in advance as opposed to 5 months. All right. So, what advice would you give a business owner looking to strengthen their relationships with the legal and financial advisors? Because at the end of the day, we view we're part of a team, team client, and that team client has a financial advisory component and a legal advisory component. How do you work that together?
So what I would say is, much like a therapist or a spouse, it's good to be upfront and open, when talking to both financial or legal. Sometimes, if we have an understanding of what exactly is going on, if there are any, sort of considerations to take into account, if there are any outstanding debts, for instance, from a financial perspective, being open and upfront on that helps to better be able to plan. And so, I would say in, kind of the current environment, especially on sort of government contracting and nonprofit side, that are relying on government grants or, any sort of government funding, really being able to look at your financials and be able to extend the runway, look at what your expenses are, look at what cash is currently coming in, and making sure that you are putting yourself in the best financial position that you can. And that's for multiple different reasons. One is to be able to help prevent from anything occurring if something unforeseen happens. Also, in times of uncertainty, there's also opportunities that may present themselves as well. And so if you put yourself in a stronger position now, if that opportunity comes across your desk, so for instance, if it was, we'd win a lot more work if we only had access to this particular contract or something. In times of uncertainty, in times where certain organizations may be struggling, those opportunities might present themselves. But that's all based on really coming up with a forecast and a plan and looking at how you manage that short, near, and long term. And the other big thing I would say is diversification. Diversification always is important, but especially in the current environment. The more diversified people are, not only in the organizations in which they work with, but also sort of their core capabilities, is becoming more and more important. Because I've seen organizations where if they're too heavily focused in one or two areas, if all of a sudden that becomes an area of focus, then that can put a significant part of their business at risk. I know, for instance, over the past couple of months, I've been working with multiple companies that are dropping the name consulting from their name because they feel like right now consulting is a four-letter word that, and they just don't want to get caught up in any keyword searches or things like that.
On the legal side, I think you strengthen the relationship by staying in communication, and I think part of that is the attorney's responsibility, but the other part is for the client to pick up the phone and call. Hopefully, you're not being billed for every conversation, but pick up the phone and call, not just when you have a problem, but, I'm considering going into a new business line. I'm considering a new engagement with a client. Are there things I should be thinking about, right? Some of that may be a 5 or 10 minute conversation. Some of it may spawn a broader conversation, but I think being in contact with your attorney more often than less, and developing the relationship by allowing them to be, as well as kind of having more information and being more deeply invested and knowledgeable about your business will allow attorneys to spot risk early on and know, as well as said with the plan, know where you're headed. So if your attorney knows that 3 to 5 years from now you're going to be looking to exit, then you say, I want to go into this business line, and here are all the things that will be required. Here's the integration risk, et cetera, et cetera. The attorney can say, well, sounds great, but here are all the ways where 3 years from now a buyer might look at it and have these concerns, right? How are you going to manage integrating this new line from a compliance perspective, ensure no risk, et cetera, so that when you're ready to exit, this new thing that you just brought on that may be a small component of the whole does not turn into a tiny bomb. So just being more communicative on both sides, not just problem solving.
Great. And so, most organizations, as they're growing, they have a strategic planning process, financial planning process, and sequence that they go through routinely. Are there any key points that they should be thinking about during that process as relates to preparing for potential exit?
Yeah, I think it's kind of more of the same, right? And we both said the same things here. putting yourself in the mind of the buyer, and then Wally's skill set, my skill set will both allow you to do that, right? Wally's gonna look at it from both a accounting perspective, but also finance and valuation. Right? What is the runway for this business? What is the growth prospect? What are the synergies with which types of businesses? And so as we think about diversification, et cetera, Wally's going to focus there. We're going to focus on, those legal issues. You talked about consulting being a four-letter word, so understanding what is on the horizon, especially in an environment like we're in today, where this ever-changing environment, a lot of times it's attorneys who are focused on the new legal compliance obligations, right? And so, I heard that there's this new certification that I have to make to the government for my contracts. Should I be making it? Your attorney should be able to tell you, let's hold off on that. There's this case that's out there. You may have to, may not have to. You have some runway there so that you're not stepping into holes now that may extend or delay the timeline for your exit.
Yeah, I just want to jump in because, when the new administration, initiated, it had this feeling like we were going through another COVID period, and I mean, I'd say that in a way of saying that we're going through a massive change, right? COVID was a massive change. This is a different type of massive change. We're here in person, but there's a lot of change, and what does change create is uncertainty. And one of the things that we started doing was really putting out, our thoughts about what was happening and a lot of the executive orders and how it was going to impact us financially, us and our clients financially, and to provide some level of understanding about what we think is going to happen. And Sheppard Mullin has an awesome blog post that they do, and it's an email list that you guys send to once a week. And it outlines everything that's happened in the last week. And I get it every Sunday. I guess your partner, issues this thing Sunday night. It comes out, but it's a really great digest of the week from the executive orders and understanding like the twists and turns of the prior week, which has really been a valuable resource, I know, for us in helping to share that with our clients, and I'm sure your clients as well.
I'm glad it's been valuable. And that's a great point, though. Whether it's because we have this upheaval and transition, and there's this specific opportunity to communicate, or whether it's just your attorney being kind of connected to your business and following the trends in your industry, so they're able to tell you, hey, forward this article to you. I'm not sure if you saw this, but we saw this and we're tracking this. I think it may be important for this relationship from a legal perspective. That's important. That's part of the strategic plan. That's how you stay connected and how you deepen that relationship.
And so, tell us about like what on the financial planning side. What are the important things to keep in mind there?
I would say certainly right now in today's environment, I think our banking friends would tell us that making sure that you have access to capital and access to liquidity is definitely important. I know that over the past couple of months, I've had clients that have had interruptions in payments, through no fault of their own, and some of, government, putting different agencies, having them take time off, or having, some of the people that have left, and just with all of sort of the turmoil going on within the government itself, it's definitely caused some interruptions in payments. And so making sure that you have, lines to be able to draw on in case of emergency or whatever, it's always best to have those things in place when you don't need them, so that when you do, you have ready access to that. I think also looking at where to make your strategic investments and where to put your capital. I have a number of clients right now that are evaluating their capabilities, especially as certain contracts have gotten put on hold, and they have people that may be sitting on the bench for a period of a month or two. It's how can they, whether it's through training, whether it's, through developing new capabilities, whatever that might be, how can they better position themselves to bring new work and come back stronger than ever? So, I have a number of clients right now that are looking at how they can incorporate AI into their existing capabilities and into their existing tool sets, so that when they're submitting proposals and everything, that they can, put forward a much more winning proposal. And then finally, I think touching on one of my previous points, right now it's really about extending runways, looking at, the expenses that are going out. I know that you had mentioned, kind of the turmoil during COVID and everything, and I know working with clients then and some of the uncertainty and everything, it was a time to really look at all of those recurring expenses and look at all those subscriptions that automatically get debited out of our bank accounts each month and everything, and saying which ones do we really need right now and which ones are mission critical and which ones can we maybe put on pause or adjust or whatever it is. And so really looking at those expenses and looking at how best to use every dollar that's coming in.
Yeah. Thanks. And I'll just, based on your comment there, I'm going to call out Gideon from M&T. We had a client that had a liquidity crisis as a result of getting slow paid, and M&T stepped up in that instance and did a great job getting them funded. So thank you very much for that. I know you worked very closely with one of our partners on that, but that was really, what we look for in our partners are partners for our clients as well, and that's really important that we have a group of professionals that can support our entire client base. So thank you. Well, thank you. All right, so there are a lot of times you've seen a lot of deals and you've seen a lot of mistakes that have occurred along the way. So what are the most common legal mistakes that you see companies make going into a deal?
Yep. So I mentioned, stock equity and not having great records around who owns the company. A lot of times those are affiliated people, related parties, and so there may be an email, there may be a napkin, there may have been a conversation. Something got changed on a spreadsheet, but not necessarily legal documentation that is legally binding. And so that would be number one, just not having great equity records. The other one is labor and employment. So depending on the size of a business, the number of states that you may have employees in, every state has its own regime. Some states are more employee friendly, some are more employer friendly. And so regardless of the size of the company, for example, California is a state where every company we see that's operating there has some sort of labor and employment non-compliance problem. And they can range. And there are a lot of different ways for employees and lawyers who represent employees to make claims against companies. And a lot of times those claims happen on the back end of transactions, right? So you may have employees who love the current management team, love the current owners, but they see an acquirer come in and they say, oh, great, deep pocket. So right after closing, they pop up with this claim. And usually within a definitive transaction agreement, often the seller, the founder is the one who's kind of standing behind the absence of certain issues. So that goes back to kind of the legal work on the front end to ensure you have the right compliance mechanisms in place. And then Wally mentioned tax. And that's another one. Both tax kind of tied to corporate tax, but also tax as it relates to kind of employee benefits, if you have retirement plans, that kind of thing. It's another area of compliance where there are strict rules and different things can happen through a company's life cycle, and often how you're providing benefits and what benefits are being provided to employees may have different tax consequences, and you want to ensure you understand that, because that's usually dollar for dollar issues that buyers don't.
Well, on the other side, what are the most common financial mistakes that you see?
So the first one I would say is, I think going into the process, having a clear understanding of what you want things to look like at the end of the process. And so what I mean by that is, are you looking for an investment? to be able to grow that business? Are you looking to merge with another business where you're hoping to then be able to grow that combined business and retain, some sort of interest in that business? Are you looking to completely exit and basically just be able to walk away the day after that closes? Really having a good understanding of what that desired outcome is extremely important. What I would say I've seen over, the course of years is that the more, there's tied up in the operations post merger acquisition, whatever it is, the more dissatisfaction ultimately results from that. I've seen cases where, owners have decided to combine their business with another business only to find out that the valuation that the acquiring business had said their business was worth, in that combined entity, really wasn't correct. And so, that all of a sudden, you have a business owner that sold his business, and you inherit the good and the bad. And if you're a partial owner in that combined business, you've now inherited all the problems of that, business that you're merging with. To the extent that there are earnouts or, payments based on performance post-acquisition, I've seen where that inevitably will lead to, disagreements in how that's calculated, or business owners all of a sudden not feeling that they have the ability to really run that business and control the operation of that business. And so, I would, make sure going into any transaction, looking at what you're actually getting at the time that that transaction is finalized, and at least evaluating, would I be happy if that's all I got? Because the more that there's tied up in that, and obviously some of that depends on who the buyer is, whether that's private equity, whether that is another, small business or medium-sized business, or whether that is a publicly traded, each of those situations is different. But I think just really understanding that is key. Now, during the process, I think understanding everything in that transaction is important. So for instance, most deals will have a net working capital target that has to be met as part of that transaction. And so understanding that that is the amount of value that after you strip in like a debt-free, cash-free transaction, that's the amount of value left in the company after you strip out all the cash and pay off any lines of credit or any outstanding debts. And so understanding that if you have a $2 million and $3 million, whatever that number is, net working capital, that's, you're saying my assets less my liabilities is going to be this amount at the time of closing, and to the extent that it's not, that difference is going to come out of the purchase price. And so really, if it's set too high, then inevitably you're not going to see what that purchase price is. So
And I think that is a key point of why you want to have finance and or legal involved before the LOI phase, and that just to prevent, missing something like the net working capital. That's definitely a common issue. All right, great. Well, thank you guys very much, Cedric and Holly. We appreciate it. So we're going to be, we have some slides associated with the presentation. We're going to be posting that in the Rose community tomorrow. If you want to join the Rose community, the Business Insights, there's a QR code here and on the TV that you can scan to get right to the Rose community. We also are going to be having our Rose Bass Conference over here at the Canopy next month. And we're looking forward to seeing all of you and many more at the Rose Conference, where we're going to be really displaying a lot of the new functionality of our EB platform.